when you go through the contents, all basically whatever we are going to now, everything is inside the book. That is the draft format under the GST, Goods and Service Tax Act, invoice rules, draft and service tax payment rules. Then there are other refund forms, goods and service registration forms, and all everything basically it goes up to the draft audit reports and ITC mismatch report. Everything is there in this book, and I think a lot of efforts have been put. I really heads off to Ashit and Pranav for this excellent work. And now, not taking much of your time, I would request Aditya to introduce Madam Sujata Rangnekar.
Good afternoon, everyone. I'm here to introduce our beloved Mrs. Sujata Rangnekar. She's a BCom, ACA, LLB. She's a practicing chartered accountant since 1988, practicing particularly in sales tax. She has been our president of the Sales Tax Practitioner Association of Maharashtra in the year 1999-2000. She's also been the president of the Sales Tax Tribunal Bar Association for the term 2002 to 2004. She's addressed various seminars, workshops all over Maharashtra on sales tax before professional bodies such as STT Bar Association, STPM, WIRC and other associations. She has addressed before non-professional bodies also such as the Rotary Club of Mulund, Mulund College of Commerce, etc. She is a regular column writer and contributor to leading journal on sales tax, that is the Sales Tax Review. Not only that, she is the editor of the Sales Tax Review as of now from the year 2014-15. She's contributed several papers on sales tax on various seminars. She's co-authored a publication of Institute of Chartered Accountants of India on Central Sales Tax Act 1956. And she's a consultant to a number of corporate clients as well. With this, I will request our treasurer, Pradeep Bhai, to offer her a memento as a mark of appreciation and love. Thank you, sir. May I now request Madam to start her session.
First session after 12 o'clock, so good afternoon. Only challenge before me is post my lecture, there will be lunch. So you'll be eagerly waiting when I'm getting over. Anyway, now from morning, Deepak Bhai has very elaborately, explained the concept of the taxable incidence or the taxable event so far as the new GST law is concerned. So we know the concept on what basis the incidence of tax will happen under the GST era. And now what I'm going to deal with is the machinery sections thereof for the implementation of that law. And therefore, these are the machinery sections which will carry out the intentions of the law which have been contained in the GST model law so far, because all my discussion will be based on the GST model law only. So right away we start with it because the topics to be covered are quite huge. First is introduction. I mean, nothing much in the introduction as such. Right from the beginning, I mean, morning we have been getting ourselves introduced to the GST law. The purpose of GST or the basic feature, fundamental feature of GST is that there should be seamless flow of credit from the supplier to the customers and so on, and even after that. So this is the basic feature of GST which will be achieved by the provisions under that act. Now coming to the basic question of registration. Registration is nothing but the birth of a dealer on the system of the department. From that point of view, this is a maternity ward of the department. And the birth will take place. Here there is an additional issue involved since this is going to be GST era. We have existing laws as well. And therefore there will be transmission from this era to the GST era, and there will be migration of the existing dealers from existing present system of law to the GST era. So registration will have to be dealt with in two ways. One is the new registrations that will happen in the GST era, and the migration of the existing ones from the present law to the GST era. So let us first talk about the new registration. Section 19 onwards, they are dealing with the new registration as such. Now first question arises, what is going to be my turnover which will attract the registration under the GST law? In the model GST law, it was 10 lakhs of rupees. For rest of India and northeastern states, it was 5 lakhs. Now, it has been, as according to the announcement by the FM, Union FM, this limit or threshold limit is going to be increased to 20 lakhs. Although I've written here 19 lakhs, that's what I'm presuming, because that seems to be their structure. When the turnover limit is 10 lakhs, when you cross 9 lakhs, you are required to take or start the registration process. Similarly, I presume that when the turnover limit has been fixed to 20 lakhs, at 19 lakhs you will have to start or initiate your process for registration. And similar is the case for northeastern states, where you have 10 lakhs as the basic limit and 9 lakhs as the point after crossing which you will have to start the process for registration. Now here they have distinguished between rest of India and the northeastern states, because from the status of development they can be on a different footing, and therefore a lower limit has been prescribed to them. Now persons already registered, I will deal with them later on, because that is the migration process which will have to be dealt separately. Sorry. Now there could be certain questions, like a person, if he has a POB, place of business, in northeastern states as well and in the other states of India as well. Now which limit to follow? According to me, once he has a place, of course I'm subject to change or any clarification is issued by the GST Council or other authority, any other authority, then we will have to abide by the same. But the question that arises is, when the POB is also in northeastern states as well as in rest of India. According to me, once you have a POB in any states, then the lower limit will apply to you, irrespective of the fact that your other places of business are across India. Then what happens to person making interstate supplies, whether he should obtain the RC in both the states? According to me, the person who is making the supplies from a particular place, maybe services or goods, depending upon the place of supply rules, he is bound to make the payment in the place from where he is making the supply, and therefore he is bound to get registered in that state alone. Maybe the ITC later on may get transferred to the consumption state. That is the mechanism provided under the law. But so far as the registration is concerned, it is the state of the supply where the person will have to get registered. And it is compulsory for any person making an interstate supply to get himself registered irrespective of the threshold limit. Then what about the person making supplies of only tax-free goods and services? If we read the provisions and the model GST law carefully, we see that if everything is tax-free, absolutely not liable to GST at all. I'm not talking about the zero-rated supplies like exports and deemed exports. I'm talking about the totally tax-free goods. In that case, he is not required to take any registration. Schedule 3 contains a provision to that effect. So it clearly says that if a taxable supply is made by a person, he has to get registered. So if you have a taxable supply, even say some nominal amount, then you may attract the registration liability. But if entire turnover is that of the tax-free goods or services, you will not attract any registration liability. Now, so far as the registration is concerned, the cardinal rule, principle is one registration in one state for all the POBs in that state based on your PAN. So PAN is the first requisite for any person to obtain the registration. If you don't have PAN, you'll have to first get it. Exceptions have been made to the casual dealers and the non-resident dealers, etc. They'll be given a temporary number, and then after they will have to file for the PAN, etc. But apart from that, PAN is a prerequisite for getting your registration under the GST law. Now to this rule that one registration in one state, I'm talking about one state, there cannot be many or multiple registrations in respect of many POBs except in a case where you have a business vertical. Now business vertical has been defined under the Accounting Standard 17 issued by the Institute of Chartered Accountants. It says that a business segment is a distinguishable component of an enterprise that is engaged in providing an individual product or service or a group of related products or services, and that is subject to risks and returns that are different from those of the other business segments. Factors that should be considered in determining whether products or services are related include the nature of products or services, the nature of production processes, the type and class of customers for the products or services, the methods used to distribute the products or provide the services, and if applicable, the nature of regulatory environment, for example, banking, insurance, public utilities, etc. So a particular legal entity having such different business segments, for a simplicity they call it business vertical, will be distinguished not on the basis of just POBs or the branches, but on the basis of their independence. So the divisions or the verticals will be looked upon as different unit altogether, which can opt for a separate registration only if it is completely independent of the other. So that's the meaning given to it. I have a case where we have 4 divisions of the same company which are almost the watertight compartments. So they have, in respect of all their financial statements, management, everything, completely independent units. And they had separate registrations under the VAT, but they were compelled to take one registration on the ground that you have only one PAN number qua that legal entity, and therefore you will have to have one registration. So the same rule will follow in GST era as well. But so far as the different states are concerned, you will have different GSTN accordingly. Now what is the consequence of these different business verticals? Now ITC is not or cannot be transferred from one business vertical to the other. So they have put the embargo on the transfer of ITC from one vertical to the other. But so far as the recovery of tax is concerned, all of them are all together. So it's a win-win situation for the department. I forgot to talk about the aggregate turnover definition, which is very, very important under section 2(6) of the model GST law, which talks about aggregate turnover means the aggregate value of all taxable and non-taxable supplies, exempt supplies, exports of goods and or services of a person having the same PAN to be computed on all India basis and excludes taxes, if any, charged under the CGST Act, SGST Act and IGST Act as the case may be. So it is the turnover across India which has to pan India which has to be computed. Okay, it includes the exempted supplies, exports, zero rated supplies, deemed exports, non-taxable supplies, etc., etc. But it does not include the value of supplies on which reverse charge mechanism is applied. Because this is the new concept. As VAT practitioners, we are not very much familiar to it. But this RCM is on the recipient, and that applies even for goods as well as services, as the new concept has been roped in the GST law. So wherever under RCM you are supposed to pay the tax, that particular turnover as a recipient will not be counted for the purpose of this aggregate turnover. So aggregate turnover will be counted on all India basis, although registration will have to be taken state-wise. So that's the difference. Now there are certain categories of persons who, whether you cross the threshold limit or not, will have to be covered by or will have to obtain the registration. Now, who are they? Persons making interstate supplies, casual taxable persons. They are also defined under the Act. Those who are not having fixed place of business in a state will be considered as casual dealers. So those who are making, say, exhibition sales in a particular state for some time or temporary period, or those works contractors who have been awarded a contract in that state, they will be casual or non-resident persons for that state. Persons who are required to pay tax under reverse charge also will be, irrespective of the threshold limit, required to get registered. Non-resident taxable persons, persons who are required to deduct tax under section 37, persons who supply goods and services on behalf of the other registered persons, taxable persons whether as an agent or otherwise, irrespective of the threshold. I think Deepak Bhai has already dealt with this particular aspect, how agents are also required to, they are considered as suppliers. Input service distributors, this is also a new concept for us. If you have the services, this applies to services. If you have common services procured by you, they will have to be apportioned between your places of business by way of issuance of tax invoice, etc. This is a concept which is there under the service tax law. Now it will apply under the GST law as well. Persons who supply goods and or services other than branded services through electronic commerce operator, irrespective of the threshold. Now, e-commerce operators, so far we were thinking they are just giving the platform, etc. Deepak Bhai also explained that they will also become a supplier. An aggregator, similar way. Such other persons or class of persons as may be notified by the central government or the state government on the recommendations of the council. So these are the various categories of people who, irrespective of your threshold limit of turnover, will have to obtain the registration. Then there is something called voluntary registration as well. So they have provided for it. Although in the rules I did not find any kind of a deposit or a higher rate of fees, etc. This is voluntary registration is allowed by the GST law. The only condition on such dealers is that they must commence their business within 6 months of obtaining the registration, otherwise it is liable to be cancelled. And what is the advantage these people get? Why should I go and block myself in the tax net? Because you will be entering the credit chain, seamless credit chain given by the system if you voluntarily apply for the registration. Now let us come to the procedural part of the registration. Within 30 days of crossing your limit, you will have to, the limits we have discussed, the final monetary limit will be determined by the GST council as the case may be. But as of today, whatever we understand, 20 lakhs, 10 lakhs, if we cross that limit, then the application will have to be made within 30 days. GST Common Portal will be set up by GSTN, that is GST Network, with back-end integration with respective IT systems of center and state. This is imperative for the GSTN because they will have to take benefit of the database of both center and state who are already administering the existing tax laws either by the center or by the state. So they have a huge database for the dealers and that will have to be imported into the GSTN. Kapadia has explained in the morning how large the database is, and that is the advantage the GSTN will have. They can straight away smoothly import that data. Application in form, now I will not refer to the numbers of the form. I have given 3 slides wherein all the numbers for which function, which form is required is given. So I will not repeat them. To be submitted with all fields duly filled in. Now the peculiarity of this application is that it is divided into part A and part B. Part A deals with certain compulsory fields like PAN number, email address and the mobile number. Now this is for the purpose of communication they want with the dealer. PAN number, yes, it will be automatically verified by the GSTN with backward integration with CBDT database. So PAN will be done by them. Email address and the mobile number, they will send you one-time password based on which the verification will be done. And after this automatic verification is done, you will have an acknowledgement generated. And that acknowledgement will be useful for filling up the second part, that is part B of this particular form. Casual and non-resident taxable persons who don't have a fixed place of business within the state, they will be given a temporary ID number, and then they will also have to follow the same registration process. Why they are given temporary ID number? Because these people are supposed to make a pre-deposit of the taxes considering the estimated liability during that period within that state. Supposing I am an exhibition holder, so I have to estimate my liability during that exhibition and make that deposit with the government. For that purpose, they give me the temporary ID number. That's why they are so efficient in giving you the number. Proper officer shall examine. Now this examination by the officers, I have a different slide. I will go in depth in that. Then applicant, that is also covered by the same slide. This procedure for registration I have covered at length in another slide, so let us not waste our time considering the paucity of time. Now in filling up the form GST REG 01, that is application form, basically we have total 23 fields. Now there are many sub fields in those 23 fields. Now certain, there are normal fields like what is your business, the nature of business activity, POB, additional POB, this, that. So all those we are quite familiar with even under the VAT Act. What is new I found in the particular form is field number 10, reasons to obtain for registration. 15 reasons have been given: crossing of threshold, interstate supply, recipient of services, transfer of business, death of the proprietor, demerger, change in constitution, merger amalgamation, aggregator, that is the e-commerce platform, e-commerce operator, taxpayer, selling through e-commerce portal, voluntary, ISD, that is input tax distributor, agents, others. These are the 15 fields they have given, so you have to select out of that. Now these fields were not there in our present VAT application form, that's why I just made a mention to it. Field number 14 is the description of goods, and you have to give along with it the HSN code as well. Harmonized system of nomenclature. So that is the basis on which your goods will be classified by them. So you need to know the HSN code number relating to your goods, and that will have to be entered over there. Field number 15, description of services and service accounting code. Now the service accounting code is the accounting code which is given under the service tax law. For each service they have a separate accounting code.